What's going on, traders? Today I will be defining and breaking down what market structure is. So a clear definition of what market structure is. Market structure is a combination of support and resistance mixed with higher highs, higher lows, lower highs, lower lows, or relative equal highs and lows. Now looking at some examples that I made for you guys. In an uptrend, what do we have? We start with the low, right here, low. We get a price leg up, creating a high, and then we get a price leg down. It doesn't break below this low, but instead it creates a new price leg up, which breaks this higher high. So this is considered a higher high from this low, and this is considered a higher low from this low. We get a new price leg up, which creates a higher high, higher than this high, and we get a price leg down. Now, support is this line drawn across right here, this dotted line. We don't want to see price break below this area right here. We don't want to see price go below this area right here. We don't want to see that. Instead, we want to see this support line hold for another price leg up, which it does. So we get another higher low, which is higher than this low right here. And we get a higher high, which is higher than this high right here, with another price leg up, creating another higher high, higher than this. Now we want to see this support line right here hold, and we don't want to see this low right here get violated or traded below. The support line holds, creating another higher low, which is higher than this low, and we get another price leg up, creating a new higher high. That is what you call an uptrend. Now for a downtrend, it's the complete opposite. We start off with our high. We create a price leg low, which is called a lower low, and we get a retracement, which is lower than this high, which is considered a lower high. Now, this is when resistance comes into play. Once we break past this price leg right here, well, actually, sorry, this low right here, and we create a new price leg lower, we want to see this dotted line right here, which is resistance. We want to see this hold. We don't want to see this high gets violated or traded through with this move up. We don't. The resistance line is holding, and we get another continuation down, creating another lower low, which is lower than this low and this low. And we create another lower high, which is lower than this high and this extreme high. And we have another price leg down, breaking this low right here. This low right here creates another lower low. And then we want to see this resistance hold. We don't want to see this high get violated or traded through. It holds and creates another price leg down, creating a new lower low. That is what you call a downtrend. Now, you have an uptrend in the market, you have a downtrend in the market, but you also have, which is the third one, which is called consolidation. Now, consolidation consists of relative equal highs as well as relative equal lows. This means that a market is going back and forth from a high down to a low, back up to a high, back down to a low, to a high again, back down to a low, and now back up to its original high. It hasn't broken out of consolidation yet, so we don't know where price wants to go. We anticipate using analysis, but for right now, price is considered consolidating. Now, you can catch trades on uptrends, downtrends, as well as consolidation. You can take a trade from the high of the consolidation down to the low of the consolidation, and vice versa, down from the low of the consolidation back up to the high of the consolidation. It doesn't matter. You can catch trades on all three types of markets. All right, so these are some examples that I came up with. I want to show you guys the market moving up, the market moving down, and also the market moving sideways. So what do we have? So we have a low established right here at the bottom, a low. What did price do? Price traded up, creating a high. This high is higher than this high. This was supposed to act as resistance, but it didn't hold. We traded above it, and price made it a new high. From this high, we traded down, creating a higher low. This higher low failed to trade below this low, so now this is considered a higher low. Where do we go from there? Price then created a new leg, trading higher, creating a higher high. This high is higher than this high, which is considered a higher high. After that, we formed the base. Right here, as you see this line right here, we formed the base. Price created an extreme high, higher than this high, considered a high high. Then traded back down to the base and created a lower high, lower than this high, but relative to this high right here. This is what we called an optimal trade entry. So price has a relative equal lows and price dropped down, taking out any sell stops or any liquidity, traded into what we call the fair value gap. You guys will learn that in later videos, but right now is when you guys are focused on the market moving up, the market moving down, and the market moving sideways. So we created a lower high right here. We dropped down, creating a higher low because this low didn't take out this higher low right here. Traded into an optimal trade entry, and then what the price proceeded to do? Price proceeded to trade above this lower high right here, creating a higher high from this higher low right here. Created a new high. Then price dropped down, creating a higher low, which is higher than this higher low. Price then created a new price leg right here, creating a higher high, higher than this high, and this past high right here. Now, looking at some examples for the price moving down, what do we have right here? So we had structure, so support. So we thought it was support. What the price do? Price broke out of support, turned resistance. High, made it a new low. From this low, we created a high right here. Traded back into resistance. Resistance held, so we have our high right here. Price then proceeded to trade lower, creating a low right here. And also we have newfound resistance right here. What did price do? Price retraced back into this resistance, and the resistance held, creating a lower high. This high is lower than this high right here, so this is called a lower high. Then price created a new leg, trading down, creating a lower low. This lower low is lower than this low, which is why this is called a lower low. Now, when we get in this area right here, this is the area right here, what is price doing? Price is consolidating. So we have relative equal lows, which is right here, this line drawn across, and we have relative equal highs, which is this line drawn across right here. Until we get into this area right here. What does price do? Price has a high. It drops below, traded below support. We want support to hold, we want resistance to hold. Not, we should look for a market structure shift. That means that the market should go into the direction that we see the market breaking out of. So market has a high, creates a low, trading below these relative equal lows, takes out liquidity, and we should see resistance hold. Price then from this low trades back into a high, optimal trade entry. This from this high to this low, traded back into it, optimal trade entry high, creating from this high, traded back down, creating a low. Now from this low, we want to see resistance hold. This resistance right here. Now from this low, we traded back into resistance, and resistance held, creating a lower high. This lower high is lower than this high. Price leg down, creating a lower low, lower than this low, lower high, lower than this high, and so on. Lower low, lower than this low, lower high, lower than this high, and then right there. So we have price in a downtrend, creating lower lows and lower highs. We have price consolidating, creating relative equal lows as well as relative equal highs. And we also have price in the uptrend, creating higher lows as well as higher highs. I've actually never traded the New Zealand dollar versus the US dollar, but I just wanted to show you guys that market structure and price is universal on all markets. Any market that you look at, whether it's a forex pair, a metal, indice, options, market structure is universal on every single market. Once you understand market structure and have your psychology in check, you will become a monster at trading. I hope you guys found this video insightful, and if you did, please hit the like button. Also subscribe to my channel, and I will catch you guys in the next video.